Hello, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. With this video, we're going to look at how to utilize FastGraphs when reviewing cyclical stocks. Our first sample cyclical stock looks at Alcoa, and a cyclical stock we define as one whose earnings can go up and down and up and down over various cycles and sometimes very erratically. But the important point is that FastGraphs really does illustrate the earnings and price relationship as well with cyclicals as it does with more consistent or fast-growing companies like we've shown in previous videos. So here we see a correlation. Now the normal PE ratio has been high here. A lot of it has to do with the variation of earnings, but you can see that price has correlated to earnings. When the earnings fell precipitously during the Great Recession, we see the stock price fell, and that the company stock price has been more or less following earnings. So the point is that FastGraphs present a very good picture of cyclicals that you don't really get with when you're only looking at the company stock price. Our second example here of a cyclical stocks looks at Belden Inc, an electrical components and equipment company, and you can see a very cyclical stock here, but you also see that stock price and earnings are highly correlated. You can see that stock price kind of followed earnings down here, then as earnings recovered, the stock price recovered, then we had another collapse in earnings followed by another rise in earnings. So, the FastGraphs really reveal, the cyclical nature of a cyclical stock as well as how the stock price follows and correlates to that cyclical nature. Because of the dynamic nature of the FastGraphs research tool, and especially with cyclical stocks, it often makes sense to look at shorter time frames or different time frames. In this case, if you look at Belden Inc. as it comes out of the recession, you can see that earnings growth has been very strong. They did falter in 2012, but are forecast to rise again in 2013. But the point is, during this period of earnings growth, the cyclical stock can generate a very attractive rate of return. You can see that Belden actually, outperformed the S&P 500 by a very high margin here as earnings recovered coming off of a low ebb in their cyclicality. So a $1,000 investment would have grown to $2,349, and the company did not increase their dividend, but they paid and maintained their dividend, but they finally did increase it in calendar year 2012. So add in dividends, and you could have made 23.3% per year compounded owning this as it's coming in an upcycle in the cyclical nature of its business. But of course, as the longer graph illustrated, you have to be very careful and look out for the next possible major down period. Another very nice feature that's useful when looking at utility stocks is to go back and look at historical time frames. For example, I'm going to look at the year 2007 through 2009, which was a period when, as you recall, when earnings were falling. And here we see that a cyclical stock can be very dangerous when it's in its down cycle. A $1,000 investment on December 31st, 2006 would have shrunk to $560. That's a 17.5% compounded annualized loss. And even when you add in dividends, it really doesn't make up for the loss. It's just another feature of FastGraphs that can be very useful when attempting to analyze a given stock. It's especially useful when looking at cyclical stocks.